Yo, what's up everybody? How we doing today? You're welcome to today's video from whatever part of the country you're watching from. You're highly welcome. Today we'll be talking about candlesticks and how you can apply them to the chart. You all know me as Banks FX, also known as Mary Banks in this business. So right now we'll just go straight to the business of what we have here today. Today we'll be talking about candlesticks and how you can apply them to the chart, trading the retail concept, the retail strategy. You understand? This is just a beginner video, beginner guide. You understand? So as time goes on, you advance to the advanced class. You get? Alright, let's just do what we have here today. I told you about the support and resistance, how the retail tend to trade. In the previous video I did, I showed you how to use candlesticks, but now I'm trying to show you now on the chart how you apply them to the chart. Now, as a retail trader, the first thing you want to identify in this market is to identify area of support and resistance. By now, I don't expect any student of mine to be telling me, I don't know how to know where to spot my support and resistance, because I've done video on that already. Alright, the first thing you do as a retail trader is to identify your support and resistance zone. And now we'll just go straight up and identify my resistance zone, my resistance level. There is a resistance level right at the spot. There is a resistance level. The market tends to resist that level. And I always tell you, once you see markets resisting, the next thing that comes to your mind, there are sellers seated above that line there. There are sellers at that level pushing the market down. Everybody is seeing that zone, that zone is very strong. So everybody tends to sell when the market gets to that region of there. And now let me identify my support region, my support zone. Exactly, this is what I want. This is my support region. Now, I told you how to trade the support and resistance. For example, now the market was trending to the downward path. The market was trending from this zone right here. The market was trending to the downward path. All of a sudden, the market gets to this region, and for no reason, the market starts going back up. Gave us an impulsive move to the upside, and the market got to this zone. But the market couldn't break this previous high that was in this place here. The market couldn't break this zone, and the market started retracing backward, started going down to the backward side, to the down part of the market, started going back, and the market came back to this region. The market couldn't break this support that was here, the initial support that was here. The market started going back to the upside. And now, what I'm expecting you to do at this region, as a retail trader, once the market gets to this support level right here that you've drawn here, the next thing you do before you take a sell, the next thing you do is for you to look for candlestick confirmation. Now, take example one in this region here. When the market got to this region, it rejected the zone, rejected this support level right here. When the market rejected it, what did the market give us here? The market gave us a hammer in this zone. If you can see, there's a hammer in this zone. Gave us a hammer candlestick right there. Also gave us some doji right there, showing you that okay, we are about to trend to the upside. That's the candlestick confirmation for you. At this region again, in the upward side, where the market rejected the resistance zone there, when the market got to this region, all of a sudden the market starts rejecting that region. The market gave us a dodgy candlestick. By now you're supposed to know what a dodgy candlestick is. It gave us a dodgy candlestick. Not just a dodgy candlestick, gave us a bullish engulfing. You know what a bullish engulfing is, you already know. Gave us several dodgy candles here, showing you that okay, this market is actually rejecting our resistance zone. And you already know that there are sellers seeing this place. You're not the only one saying that this zone is strong. Everybody trading the retail concept is already saying that okay, this zone is strong. And what do you do next? You sell. Once you sell, the market start playing. The market cannot just go straight. The market start playing around, and all of a sudden the market eventually gets to its destination, and the market start retesting to the upside. And now when the market starts retesting, the market came to this zone again, our support region. Now using candlestick confirmation, you don't just jump in. The next thing you do is for you to wait and see what candlestick is about to form. And what did you see here? It gave us some dodgy candlestick and some hammer, and also gave us a big bullish engulfing, which you can go in after seeing the dodgy and the candlestick. If you like, you don't even need to wait for the bullish engulfing. You can just go in once you see the dodgy and the hammer. You get the same thing apply in this zone up here. The market, and I told you, you don't just trade candlestick in every part in this market. You don't just say okay, bank said once you see dodgy you start trading. No, you only trade them at a key level, a particular zone which you already know that okay, this market is supposed to reject that zone and come to the downward path, or this market is supposed to reject and impulse to the upside. You understand? Those are the level you tend to trade. That is why you have not seen me saying look at what's it called, dodgy at the center, you trade it. No, I'm only showing you at key levels. This is also a key levels where you already know that the market is supposed to resist and reject this resistance right here. And what happened? The market came to the resistance zone here, gave us some dodgy candles, gave us some hammer, which is supposed to now. It also gave us a bearish engulfing candle, in this region, which you already know that okay, this market is supposed to go down. And what do you do next? You sell. And what happened? The market trend. The market played a little around all this zone here, and the market came up back. And what happened? Eventually came to this down path. And if you have been watching my videos, there's one thing I always tell you when trading the retail concept. I told you about the third touch. The third touch always has the highest probability of playing out. The third touch in a resistance line or a trend line always has the highest probability of playing out. Now watch this. This market was trending to the downward path. If you can see right from this region, it was trending to the downward path, And once the market got to this region, all of a sudden the market started going back up. This is our first touch here. And if you want to trade the third touch, I will advise you don't just trade them anyhow, but if you feel like trading them the way you want, is still cool. But if you want to do it my way, you tend to follow the third touch as the trend of the market. You already know that this market is trending to the downward path. All this thing is happening is just consolidation. The market is trying to rest before it continues its movement. So to me, I will advise that you only enter the third touch to follow the market and continue the movement. Because if you want to buy at this region here, you are trying to go against the trend of the market. Because if you can see here, the market was trending to the down path, and the market was trying to rest, consolidating, ranging at this region. The best thing to do is just to enter at the third touch, to follow at the third touch as the upside, just to follow it. Because you already know that okay, since this is the third touch, we are going back to this region to give this place his own third touch. You understand? Once the market gets to this place, what you do next? You sell. Once you sell, what happens? You follow the trend of the market and continue trending to the down path to where you want to take your profit. You can take your profit right at this region, the support region. If you like, you can wait and go outside the box, the trend line, the support line there, and you just do your thing. That is how it is, guys. These things are simple. But the ability